Hello traders, Gary Wagner here. It is 11 o'clock in Honolulu, 5 o'clock in New York on a Friday. Happy Aloha Friday, as we say on the islands. It is the 23rd day of August, 2024, and this is the evening report for gold and silver, our weekend review.
Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased.
Jerome Powell's highly anticipated speech at the Economic Symposium marked a dramatic turning point in U.S. monetary policy. In essence, Powell declared that the Federal Reserve is prepared to embark on a new phase of interest rate normalization, signaling the first rate cut most likely in September. Gold reacted in a positive way, getting back all but $3 of yesterday's dramatic decline. Today, gold gained $28.10, taking the most active December contract to $2,548.70. Silver also had a dramatic rise, gaining almost 3% at 2.98% or 86.5 cents, taking the most active September contract to $29.86. The dollar continued to lose value, today giving up another 0.83%, taking the index below 101 to 100.668. To get a real sense of how far and quickly the dollar has fallen, we have pulled up a weekly standard candlestick chart. You can see that over the last 4 weeks, the dollar has fallen from above 104 to just above 100. In other words, approximately a 3.75% devaluation of the dollar. On a technical level, the key level to watch is right above 100. It has to do with this bottom that occurred in July of 2023 when the dollar index fell just below 100. Because below that, on a technical basis, you can see that it took years from 2021 when the dollar index was just below 90 up till its apex of 114 in September of 2022. To gain this value, it has traded in a range-bound manner for the last 2 years between approximately 106.70 to 100. And so if the dollar does continue to drop in the next couple of weeks, we want to watch very closely to see if it breaks 100 on the dollar index. Because it has been dollar weakness that has had such a dramatic and profound impact on gold, moving it substantially higher from the lows of October, about $50 below 2,000, to rise over $500 in a short period of under a year to its current pricing at $2,548. Because now that gold is effectively in new and uncharted territory, we can easily identify a key level of support right at around 2,500 to 2,520, as we've talked about over the last couple of weeks. But in terms of forecasting the upper level, we have to look at recent activity in terms of the size of the move, and I am referring to what we are labeling as a primary wave 1 to ascertain where gold could go to before entering a corrective period. To that end, as you know, my target remains $2,585 at minimum to possibly as high as $2,600 to $2,625. That would represent a 1.236 extension of primary wave 1. To that end, we will look to position ourselves over this next week at a realistic entry point, considering that our upper target remains about $40 to $80 away from current pricing.
Since I believe we are still in a wave 1 of our primary count, I am today going to go over our intermediate count. To make it more apparent, I will put our daily candlestick chart into a 4-hour candlestick chart. So I am going to pencil in our intermediate count. I believe we are in our 5th wave of our intermediate count. So what are some techniques we can use to distinguish where this 5th wave may end? Let's go ahead and put this back to a daily chart. There are a few ways to hypothesize where a wave 5 will conclude. They include a 1-to-1 and a 1.618% extension of wave 1. Today we are going to use another method which involves taking the distance of wave 1, adding it to the distance of wave 3, and multiplying it by 0.618. So first off, we will measure our wave 1, and our wave 1 is approximately $1.60. Then we will measure our wave 3, and it's approximately $2.80. If we add those together, we get $3.40, and if we multiply that by 0.618, we come up with $2.10. $2.10 would take us to approximately $30.90. That is where I am forecasting our 5th wave to conclude. And remember, this is a 5th wave, which is in our intermediate count, all being part of our 1st wave of our primary count. So I believe we could conclude this 5th wave next week, and we could see pricing around $30.90 by the end of next week in silver.
This has been Gary Wagner
And Joseph Wagner.
wishing you, as always, good trading. Have a great weekend. Bye-bye.